What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel focuses on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and trading method we use can be applied to any company that's publicly traded on the U.S. stock market. Our nightly and weekend videos focus on identifying the triggers and targets for trades ranging from scalps and intraday trades to long-term swings and leaps. So if you want a deeper dive into how we set up our charts and our trading levels, check out the bonus content on our YouTube page. And for more information about the strat, which is the base of our charting and trading method, there's some free information in the description of this video. Let's go ahead and take a look at the agenda for today's video. We'll recap today's price action, then we'll zoom out a bit to look at the week, month, quarter, and year. Since we've reached the end of this week, don't want to be too zoomed in. We want to zoom out and get a little bit of perspective there. So we'll then take a look at the market maker's expected move for this coming week, up to October 3rd. And we'll zoom back in and set our 4-hour markers and triggers and targets for Monday and for the week. And then we'll do a quick review of the triggers and targets for the month, the quarter, and the year as well. Just getting into the charts, we'll just pull up the 5-minute for the scalping perspective for the open of the day. We can see here we've got our overnight high up here at 34.45, previous high day of 34.06. We did open up within yesterday's price action at 33.93. We've got the week flip here at 33.20, and then we've got the overnight low at 32.95. Market makers expected move low of 32.27. And the previous low day at 31.36, which is just slightly below last week's 50% at 31.53 here. So from a scalping perspective, those are like the major levels that we want to know about, right? We get the opening print here at 33.93. And initially we get, just up and down action across opening print. So no real triggers to go off of, real solid triggers, right? We got a bearish engulfer here to open the day, and then we got an inside candle. So big indecision and tight indecision. We got a push down with the 2 down, then it looked like another 2 down, but it went back up to create a bullish engulfer and give us a green 3. But that set up the 3, 2 up, 2 down. So we got the 2 up here, which is technically a lower high, right? And then we got an inside candle. And we got another 2 up, just slightly higher than this 2, but it was still a lower high in the trend sequence. And then that turned into essentially a 2 down, but all within one candle. So it did trigger the 3, 2 up, 2 down. If you got in at the trigger would be right here at 33.76. Then you could have rode that all the way down. You can see there was corrective price action, a little bit of corrective price action at the week flip, but went all the way down to the overnight low and bounced there. A little bit more corrective activity around the week flip, and then that was basically the bottom for the day. You could take the more riskier, technically a riskier play by getting a call underneath opening print, but that did pay off, right? So if you wanted to risk a little bit, maybe size down your position or just have a tighter stop, knowing that you're getting into a little bit riskier play, no harm in that. And it ended up paying off today. So got back up not only to opening print, but back up to previous high day. Tried to continue to poke above it, but we ran into this 34.14, which is last week's high, which was a little bit of resistance yesterday as well, early on and late in the day. So it remained resistance for us, and couldn't push any higher. Just went sideways into the end of the day. Not a whole lot there to do past noon central. So I hope you were able to take advantage either of the downside or the upside action or both. We did participate in both, and had a pretty decent Friday. Looking at it from the day perspective, let's pull this up in a little bit cleaner chart. We can see, we had the opening print, and we did end up getting the 2 up on the day, so it triggered the 2 down, 2 up. Didn't quite reach magnitude, which is the high of this candle here with 34.39. And let's see, 34.06 was the high. We closed at 34.02, so couldn't quite close above yesterday's price action, but we did have somewhat of a hammerish candle, more of a doji, but the key is that we had a much bigger lower wick than we did upper wick, meaning bears tried pushing price action down, and it got bought back up. So currently we are working a higher low. But that's following a higher high. So it just created this broadening formation that we talked about yesterday, possibly being formed. So couldn't get that higher high on the day perspective, but are creating just a broadening formation. So at this point, moving back up towards the top part of the broadening formation. We'll see if we continue to push up next week. I know there's a lot of economic data being released next week, so we could get the push down and this end up being a lower high, right? So if we break to the downside without breaking the upside, then we have the lower high on the day perspective, and that's the start of a downtrend, right? The lower low, lower high, and next thing we're looking for is another lower low, possibly extending the lower part of this broadening formation, possibly even dropping back through. We've talked about for a couple of days, well, about a week now, that we did when we got this breakthrough last month's high of 29.66. That was our breakout level, and we only had an intraday retest of that 29.66. And then we just continued to bounce. So from a day, even week perspective, we haven't retested this 29.66 level, and like we said, it's totally reasonable to expect that could be a possibility, right? We're not in just such a bullish uptrend, especially at this point now that we've created this broadening formation, that we can't pull back to this level. But that is where we stand. We could take a look, and depending on where you want to draw it from, we could do something like this. Could just be a bull flag, right? And we're just looking to continue to go up and meet these other levels. But we'll see how next week starts. That's just from the daily perspective that we did finish. Again, it's not bearish, really. It's not bullish. Well, it's somewhat bullish, but it's not that bullish. It's more of a neutral. Again, we've got this broadening formation. From the week perspective, we pulled back in and we closed within last week's price action. So not the most bullish thing in the world. Let's bring up a better. Yeah, here we go. So we did go 2 up on the week, but we did close slightly within last week's price action. So it's pretty bullish that we've got the 2 up, and it finished green, meaning we closed above where we opened. But it's not the bullish thing on the board when you close back within the previous week's price action. Just barely closed within there, so not a big bearish signal, right? We again are still shooting for this 36.15, which would be a higher high on the week perspective that we had before that drop at the beginning of the year to that April 7th low. So again, on the week perspective, that's a target, and on some of these higher time frames, it's a target as well. So that 36.15 should be really ingrained into your brain. Now, another good thing is we did close above this weekly broadening formation, so looks like we're defeating it at this point and going to press the next weekly broadening formation. But again, if we get that 2 down on the day on Monday, then that starts our downtrend. And if it starts a downtrend on the day perspective, we could break the lows of this week, and causing a 2 up, 2 down, and that would target just below this last month's high, the low of this candle, which is a 28.92. So just want to keep in mind what we have to the downside. There's plenty of room to play it to the downside if you want to. It is a level of support. We have had that breakout, but a lot of times, we need the retest of that breakout level to turn that resistance into now support, and then continue to the upside. So we'll see what happens next week. Don't want to get into predicting anything like that. So we'll be ready with our triggers and targets no matter which way it goes. From the month perspective, again, we're still looking really good with a solid 2 up candle. Looking for this 36.15 as well, again on the month perspective. So 36.15 is that magic next step for the bulls. And then if we look at it from the quarter perspective, we are in the 2 up, 2 down. 2 down, 2 up on the quarter. Let's bring out the one without the broadening formations. There we go. So we are in the 2 down, 2 up. The magnitude is the high of this candle right here, which is 36.15. And then once we reach that 36.15, if we breach it, then we've got this one combo 2 down, 2 up on the quarter. And the magnitude for that is not the high of this one, but actually the high of the candle to the left of the one. So that's 70.08. And we can see how that 70.08 comes into play on the year perspective, because again, we had the bad start to the year where we went 1, 2 up, 2 down. targeting that 621. April 7th, we got down to that 723. So from a yearly perspective, if that is going to be, the low of this year, that gives us a higher low if we go 2 up next year. So in 2026, or if we finish 2025, in this kind of hammer kind of pattern, then we get a 2 up next year. Then that's a 2 down, 2 up, targeting the 7108. Or 7008. That's the magnitude of the 2 down, 2 up move. So not only are we putting in a higher low, then we are triggering that 7008, which isn't the all-time high, but it puts us back in around that area. So we'll see what happens. Again, we're not getting into predicting anything, but that's what it looks like at this current time. So if we just go back in here, we've looked at everything from the year perspective and the intraday price. Let's look at the market maker's expected move for this week. To do that, we're using Thinkorswim here. We go to our options chain for next week, October 3rd, and we can see that there's a market maker's expected move of plus or minus $3, and we'll call it 21 cents. So if we go back over to our notes here, we can see we've already got it charted out. For the week of 9/29 to 10/3, we've got a $3.21 expected move, plus or minus. That gives us a range of 37.23 and 30.81. So if we just go back to our charts here, let's pull up. We can see that we've got. Oops, there we go. I'll make it a little smaller. We've got our chart here. We've got the market makers expected to move marked out. 37.23 is the high. 30.81 is the low, so got a decent range for SOXL to move in either direction, right? So even if we do get to the bottom of the market maker's expected move, low, it is still a level of support. So again, even if we get down to this 29.66, I would even call this the major line in the sand that we should be bouncing off that if we get a pullback to that level, if things are going to remain bullish. Right, so we are deep into September. It's almost October. September and October are statistically the worst performing months for tech. We haven't really seen that seasonal weakness. So maybe we see it here at the end of the month and leading into October. And maybe this daily downtrend, breaks below that 29.66. If it does, then we switch our mindset and we're no longer looking at things in this uptrend, and from a day perspective, we've got to at least respect the downtrend that's occurred, and from the week perspective, what could start to occur. We do have gaps down here. Right here at this year flip is pretty crucial. That's where we had bumped our head against in that 11-week range there, basically every time being rejected. So if we get back below that level, that flips the year red, and we've got to fight to get back above that particular price level again, and who knows how long that might take. But again, that's if things just turn really bearish. Well, I don't even want to say really bearish, because SOXL is a triple leveraged ETF, so price can move pretty fast. You can see how quickly we went up. We can go down just as quickly as well. So that's the market maker's expected move for the week. Just some levels to keep in mind. It's not the end all be all. Price action doesn't have to stop there. We've seen weeks before where it goes above or below that price, the market maker's expected move. But 70-80% of the time, price will stay within that range. So we can look to play those levels. Let's go ahead and get into our 4-hour markers and our triggers and targets. Let's start from the from the scalp perspective, and we can see that towards the end of the day, there was a 15-minute downtrend that was put in, but it looks like we were breaking it at the end of the day, pulled right back to it. So we do want to keep in mind that we do have a downtrend line that is near. Again, we don't put too much weight in downtrend lines, but we do have to respect that they are there. So it doesn't mean that price will reject, but it means there's a higher probability that we'll get some corrective activity or some sideways or volatile activity at that level. So we can see we got the important 4-hour markers, which was the previous high of day, overnight high, overnight low, and previous low of day. Now, pretty much guaranteed overnight high and overnight low are going to move by the time we open up on Monday. So we'll play those how they come, but we'll just, for an example, if we want to say price, we get a little pullback over the weekend and early Monday morning before price opens, before trading opens, and say we open up price action here at 33.66. If that's our opening print, then we're going to be looking for higher lows above that level to get into calls, and we're going to be looking for lower highs below that level to get into puts. Right? So if we open here, we get a push up, say we get a rejection off of this 150 fib extension of this September 17th gap and go. It's been a pretty major level that we've dealt with for about a week now. If say we push up and get a rejection of that level, it pushes back down, but then we get a higher low above opening print. That's where you want to enter calls. We'll probably be pushing through this level at that time for the, once we test it that second time, and should probably push through it if things are going to be bullish. So you want to enter calls, and you want to target the overnight high and previous high a day, whichever one comes first. If over the weekend the overnight high pushes up here, then on our calls we're going to be targeting previous high a day first, and then we'll be targeting overnight high. However you want to scale in or out at those levels is up to you. Some people like to scale out when they get to that first target. Some people like to scale in when it shows support at that first target, because that means things are going in that direction, so you want to add to your winners. Once you get to your overnight high, some people will cut their whole position. Some people will cut a majority of their position and leave some runners. So it's all up to you how you want to play it. But just from a scalping perspective, it's very simple. Higher lows above opening print, we're looking at calls targeting overnight high and previous high a day, whichever one comes first. Next one is the next target. If we get lower highs below if we get lower highs below opening print, we're looking to get into puts, targeting the overnight low and then a previous low a day. Do want to keep in mind that the last week's high, or this week's 50% line, this is a chart for next week, right? This week's 50% was 33.33. So you do want to keep in mind that this level a lot of times will be a bounce point or a rejection point. If you're opening above, the previous week's 50% level, a lot of times it'll be tested as support to continue the move up. If you open up below the 50% level, then a lot of times it'll be tested as resistance. If it does fall through the 50% level, then it is a more bearish signal, and you want to look at it as a point of resistance if price action does continue to come back up. So those are the major levels you want to keep in mind from a scalping perspective. From more of a day trade, maybe even an overnight swing perspective, let's go ahead and bring up our swing chart. We can see that, right, we've got our 11-week range here that we were in from 24 to 28 essentially. We've got our breakout point. We've got our intraday test of the breakout point, and then the further push up. We've got a 2 up on the day today, but it was a somewhat kind of a weak 2 up, right? It's just a doji, somewhat of a hammer. So it did qualify as green, so it's somewhat bullish, but we do know that we could pull back down at any time, especially if we open up below last week's 50% line. There's a higher probability that we're going to get that 2 down on the day, and then we're looking at possibly getting that lower low, and that would start the downtrend. So if we get let's pull up the 4-hour chart real quick to just look from there first. You can see how the second 4-hour kind of fizzled out, right? We had some good price action in the first 4-hour, but that second 4-hour was pretty consolidated, basically fizzled out, and actually even closed red. So if we do get action to the downside, that's a 2 up, 2 down, triggering at the low of the second 4-hour candle and targeting the low of the first 4-hour candle, right? So that's triggering at 34.23 and then targeting, or has a magnitude of 32.83. Now, if it breaches below that 32.83, then you've got a 1 combo 2 up, 2 down, which again, the magnitude is not the low of the 1, but the low of the candle to the left of the 1. So if we do get to this 32.83 level, and we're continuing to push down, your next target would be 31.36, which is the low of this first 4-hour candle of Thursday, and actually last week's, or this past week's low, which still has a little bit of a gap below it that was not filled in on Thursday. If we get a push to the upside, then we get this 2 up, 2 up. It's a continuation, so it has a very clear entry, but your target, there's no magnitude. It's not a reversal, so there's the target needs to be something that you've been able to establish as another price level in the upward direction based off of previous price action. So if we get the 2 up, 2 up, we're triggering the high of this 2 first, this 34.39. just because that would complete this combo 2 down, combo 2 up strat. It's not a long ways to go, but we can see how we've kind of fizzled out here, and this level right here has been kind of support and resistance. So we could run into resistance again next week at this level. Once we do pop above there, that triggers the combo 2 down, combo 2 up, and then we're triggering the high of this candle here, the 35.30, which is the high of last week. So once we get past there, it's more of into our daily triggers and targets, so we won't go too much further on the 4-hour perspective. From the day, we've already kind of looked at it from the chart. We'll just go over it one more time. 2 up, 2 down, triggers at the low of today and targets the low of Thursday. 2 up, 2 up. It actually triggers a combo 2 down, 2 down, combo 2 up. First targeting this 34.39 that we were talking about, and then targeting the high of this 35.30, which was the high of the week. What was that, Tuesday? Yeah. So just looking at it from on the paper, looking at it from pure numbers, right? Again, we've got our, this is for Monday, September 29th. There'll be 64 trading days left in the year. The close today, or for Friday, was 34.02. So we don't know what the week flip will be yet. Week hasn't opened, but we know what the month, the quarter, and the year flip are. So to flip the year, the month, quarter, and year red, those are those levels. We know what the market maker's expected move is for the week, and we've got the range. We know what the gaps are above and the gaps are below as well. From the 4-hour target perspective, like we talked about, it's a 2 down, 2 up, 2 down. I don't know why that's down. 2 up, 2 down, triggering at 33.86 with a magnitude of 32.83 and extended target of 32.39. To the upside, it's a 2 up, 2 up continuation. So we've got the trigger of 34.23, and we've just got the extended targets of 34.70 and 35.07. Those then will roll into your day triggers and targets, right? So the day would be a 2 up, 2 down at 32.83, which is the magnitude of the 2 up, 2 down on the 4-hour. So that triggers at 32.83, and it has a magnitude of 31.36. Extended targets of 30.45 and 29.66. That 29.66 is the high of last month, the high of August. If we go to the upside, then we get this 2 down, combo 2 up, triggering at 34.23 with a magnitude of 34.39. Target of 35.07, 35.30, and 35.95. All right, so we went over those on the chart. From the week perspective, I'll just pull it up one more time. Let's see, week. Let's get a clean chart out here. So we did get the 2 up on the week. So if we go 2 up, 2 down, that triggers at the low of this week, which is that 31.36, and the magnitude is the low of the previous week, which is that 28.92. If it goes to the upside, we got a 2 up, 2 up, triggering at 35.30, which is the high of this week, and we've got our target of 36.15, which is that higher high on the week perspective, and then that 38.45. So we go back to the paper, or to the notes, and we can see for the week at 10.3, if we get the 2 up, 2 down, that triggers at 31.36. The magnitude is 28.92. The target is 27.58, and then extended target of 26.11. To the upside, we would have a 2 up, 2 up continuation, triggering at 35.30 with the target of 36.15, 38.45, and 39.26. I won't go to the charts for the month, the quarter, and the year because we already went over those early in the video. But again, we're in this 3-2 up. We're solidly above this trigger of 29.66. We've taken out 2 targets, and we're shooting for this 35.95 and that 36.15. Again, that golden number that we're looking at here from the week, the month, and the quarter perspective, right? The quarter, we've triggered that 2 down, 2 up. We're still in force because we're above that 25.84 level. The magnitude is 36.15. Once we reach that, we have extended targets of 38.89, 42.04, and 44.54. From the year perspective, again, we triggered the 1, 2 up, 2 down. That's why it's underlined, but we're no longer in force, so it's not bold. It triggered at that 23.50. We didn't quite reach that 6.21, meaning that if we finish the year how we are now and we go 2 up next year, that 7.23 we reached in April will be a higher low. If it were to go green 3 on the year, it would trigger at 70.80. So we're a long ways off from that. I don't think we're going to double by the end of the year. If we do, that would be awesome. But I don't. Yeah, that's probably not going to happen. So there you have it. Those are your triggers and your targets. Again, If you want more detailed breakdown, want a more detailed breakdown of how we set up our charts, what the different colors for the different lines mean, how we set up our broadening formations, how we set up the levels for our scalping and our precision trading, make sure you check out the bonus content on our YouTube page. We've got a couple videos there where we go more in depth. If you're not familiar with the strat and it intrigues you, it's again a very simple, probably the simplest way to look at price action. Make sure you check out the information in the description. I've put a link to a free PDF, and then I've also put a link to Rob Smith's YouTube page. He is the inventor of the strat. Unfortunately, he's no longer with us. He passed away a couple of years ago, but his YouTube page is still up, and it is a wealth of knowledge. There's a big strat community out there as well, so you do a little bit of searching out there on the internet, and you'll find a wealth of knowledge out there as well. People have everything from scripts that you can use with TradingView and Thinkorswim to, everyday morning shows and things like that. So make sure you check that out. I suggested, I wish I learned the strat first, right? Years and years ago when I first started charting, pre-COVID and pre all this options explosion. I was learning to read charts with simple moving averages and MACDs and some people can use those very well, but if you want a very simple way to read price action with barely any lines on the chart, the strat is the way to go. So I'd suggest checking it out. Anyways, thanks for hanging with us through the whole video. Make sure you hit that subscribe button and hit that notification bell. That way you're alerted to whenever our new videos are dropped. We do release videos Monday through Thursday during the week and once on the weekend. But again, we'll drop that bonus content from time to time. So make sure you are alerted. That's it for today's show. Depending on when you're watching it, I hope you have a good rest of your weekend, or I hope you had a good weekend, or if you're in the middle of it, I hope you have had a good weekend and will have a good rest of the weekend. Either way, I hope everybody enjoys this video. Make sure you get some good rest on Sunday night. That way you can wake up refreshed and attack the market with some good energy on Monday and throughout the week. It's always good to start off on the right foot on Monday. So that's it for me. We'll look forward to trading with you all on Monday.